Hello, everyone. Welcome from Temecula, California. And I am Sandra. Jay is here, where we're Trading Made Simple. And our special guest today is Louis Payne. And if you don't know Louis is an expert really at scalping the ES with Sierra charts. And this is a style of footprints that allows him to actually see individual order flow to allow him to trade with precision. And so I'm going to welcome him on here, and I want to welcome you for coming tonight. I really do appreciate it. This is something a little different that we're having on. And I am not an expert at futures, but I'm looking forward to learning. So Louis, before I say welcome, Louis is notorious in his own right. Louis was a professional hacker when he was young, and he didn't hurt anybody. He didn't steal any money or anything, but he certainly could challenge Pac Bell and the FBI pretty good. He turned his life into a different direction and started actually assisting law enforcement with fraud. And he created a company that actually prevented computers from being hacked, as well as a payment system that got bought out. So Louis is very experienced in different professions, and I welcome you on. I think it's pretty exciting. You have an excellent story.
Thank you, Sandy. So I'm using push to talk here, and hopefully I'll remember to push the button before talking so you can actually hear me. Anyway, yeah, very happy to be on here.
So I wanted to ask you, you've been trading for about 40 years. And, you know, a lot of us that start our trading careers or our trading processes get into stocks, you know, 401ks, and then they kind of branch out and, you know, into options. Was that kind of your style as well when you got into the actual physical art of trading?
Well, you know, I started very young, very early, and there were few things available back then when I started, right? I mean, I started in the days where you had to phone in your order to the broker, and I drove my broker crazy because I would be phoning in to move my stops like every hour. And so, I mean,
You
it
were
was
a
just,
day trader even back then.
yeah, it was just a whole different world. And yeah, I basically started actually trading options. And it was nothing, you know, nothing spectacular. I mean, literally, I would just either buy a put or buy a call. Single instrument, no straddles, nothing special. And I was actually trading in a company that, you know, we used in business. So I was very familiar with what, you know, that company, Digital Equipment Corporation, was doing compared to IBM at the time, you know. So, and, you know, I belonged to various groups. And so I knew what the company was coming out with to compete against IBM's mainframes and things like that. And I was basically trading calls and puts in that company. You know, it wasn't insider information or anything. It was just trading by someone who was directly involved in that industry. So I had the knowledge of the industry. But that was my foray in the early 80s into options.
Well, footprints right now is becoming so popular. I mean, everyone now, I think, has heard about some sort of software about order flow. I mean, order flow is everywhere. In fact, if you're a retail trader that you know, and you're not using some sort of order flow to see where the institutions are actually buying and selling, then you know you're not utilizing all the tools that are available to you as a retail trader. So now that we actually have graduated, right? We graduated from trend trading to order flow, and now tell us about footprints and Sierra charts.
Well, you know, I took many different journeys in the world of futures. The market, of course, has completely changed. When I first started, there were no micro contracts, and commissions were very, very high. So I was paying $12.50 for, you know, entry and $12.50 for exit on my trades with the ES. So you really had to have many points moved to make it, worthwhile. Nowadays, it's a whole different world. When the pandemic struck, I sort of found myself with, okay, well, what do you want to do now? So I got more serious into the trading aspect of things. I equipped myself with, what I thought would be good technology, which was, Sierra Chart, using their excellent, what's called the Denali data feed, and a direct connection to the CME for trading bypasses the brokerage. It just does a check with the brokerage to make sure that your account can handle, that your account is properly funded for the size that you're trading, but the trades are placed directly with the CME. So very little delay. And so anyway, that's my current setup. And of course, we can get more into this, but
absolutely. In fact,
I graduated into the footprints. Go ahead.
No, I was just going to say, I just made you the host. So if you want to put your chart up, just to show us what that kind of looks like. The first time I heard of Sierra charts or footprints, I really didn't know what I was looking at. And so it took me a little adjustment, but I'm getting more familiar with identifying those orders within that chart. But is Sierra Charts the only, is that really the only company that creates those types of footprints?
No, I'm
visualize that.
And by the way, if I do a screen share, it's gonna drop your live feed, by the way, to put my chart up, just so you know. But no, Sierra Chart is not the only one that does that. It's just that Sierra Chart, I looked at some of the inner details. Sierra Chart was written in C++, so it's not some heavy thing written in Java that's going to be slow. And the other thing about it is that Sierra Chart was fully extensible. If you know how to code in C++, you can actually write new studies and modules for Sierra Chart, and they're very, depending on, of course, your skill at writing them, they're very fast to respond. So it was an ideal platform for scalping. If you're like doing swing trading and stuff, you could use practically anything else given the time frame. I'd be happy to put up a chart when you're ready. It is going to
let me just tell everybody, hey, if you're right now in my channel and you're watching this on YouTube, and if we get disconnected because he puts up his chart, please go over to our Discord. We have a Zoom link up there. You can connect with us there, and we apologize for any technical difficulties, because that's all my life is really about these days. Go ahead.
Yes, indeed. It's just gonna drop your video, I think. Let's see. Let's try to do that.
All right.
Oh, well, I see me, and can you see my chart?
Yes, I can see it, and I also think it's on YouTube as well. I think it's all good.
Yeah, we see you.
Excellent. Awesome. Okay, thank you. Yeah, so I just need to get rid of this little thumbnail window. Okay, now I can see my full charts. So I was actually doing, let me get to the end of this.
So your mic is off?
Okay, how about now?
You're on. Sound good?
Oh, good. Okay, so I was actually doing some analysis of what, and I live stream this. We'll get into that later.
So like the everything on the left actually looks, to me, relatively identifiable. It's really the chart on the right that looks so interesting. To me, it's on my side. Oh, is it your mic or is it my mic that's off? Oh, I think your mic is off again.
It is.
Okay, can you hear me? Yes, you can hear me. Let me just well, if I unmute, it's going to echo. So it permanently, it's the push to talk. As soon as I click on Sierra, you know, my push to talk is disabled. Let me see.
Yeah, you're off again. I'm glad I'm not the only one that has all these issues. Makes me feel a little bit better, Jay.
Okay, there you go.
All
So
right.
now I'm not on push to talk, so we're probably going to echo if we go back and forth. But let me just show you an example here. I'll pick a particular time here. Okay, there we go. I'll just, can you see this where my cursor is circling? Okay. So, and unfortunately, you know, what I'm just going to describe something very simplistically. There are many factors that go into the analysis of this, and there are many different types of scenarios to be analyzed. So this is just one type of occurrence, and there are other things to take into consideration. So the fact that you in the future spot something like this does not mean that it's going to respond similarly. You know, there are other things to consider. One of my big considerations is liquidity. So if you were to ask me that, you know, well, what type of trader are you, right? Because there's, you know, well, you know, I'm a volume profile guy, I'm an order flow guy, I'm a, you know, TPO chart guy, this and that. There's all sorts of different types, right? And me, I'm sort of something different. I'm a liquidity trader, not necessarily an order flow. I'm a liquidity trader and I'm a footprint trader. So my first thing is I'm a liquidity trader, which means that I use liquidity as my ultimate gatekeeper that says yay or nay to a trade that I've determined by some other method. And that other method is footprint. And let me give you an example here. So you see that I've already got this here with an ellipse around it.
Yes.
And in this particular footprint chart, you know, this footprint right now, just looking at it, the first thing that it tells me, I can see that, you know, we started here, we had sellers selling off the bottom of this bar. These are things that you can't see in an ordinary bar. So this is basically, as somebody else said, the X-ray view of the bar.
Okay.
And you can see that, you know, we're obviously, this is a red bar, and you don't see the center part is the bar part, what you would normally see. So where the center part ends would be the wick of the bar.
Okay.
And so this bar is selling off. And as we get to the bottom here, sellers start applying a lot of pressure. And what we're seeing here on the, let me take this fat bar here, which is easier to illustrate.
Pressure, you're saying because it's a wide bar on the bottom, because it's like a foundation to the side, or? Yeah,
you know, the problem is, every explanation is going to require a rewind. So let me give you a rewind, a preface. Okay, this is the preface. Let's take a look at this bar here. The thing about this bar, what you're seeing on the left here, this is pure volume, tick by tick inside the bar.
Okay.
Oh, that's actually my system telling me that there's an event happening in Globex right now. Oh. But I won't look at that.
You sure?
So, yeah. I mean,
all traders here, we love that shit.
I know, but this is Globex, so that, you know, it could take 20 minutes to see what that event finally is. Okay. So, okay, the way you read these particular footprints, which these are very customized. I made these very customized. On the left side here, you have sheer volume, just, you know, the total volume on a per tick basis. So you can see what the volume was on this bar and where the majority of the volume was on this bar. Okay.
Got it.
On the right-hand side, you have delta. You have basically ask volume minus bid volume. So, you know, the question is, well, is ask volume or bid volume winning? And if you look at just, you know, a plain old bar, you can't tell. Here on a tick by tick level, you can see what's happening, and you can actually see what's happening while the bar is forming.
Okay.
So now with that explanation that, you know, the left side is volume, you know, the right side is delta. Okay. With that, we go back to this bar. And we're now equipped with some of the basics to understand at least, you know, what the hell's going on here. Exactly. So the first thing is price starts going down. These are red in the middle. The center part is red. So that was a red bar. Price is going down. Price continues to go down. And as price continues to go down, you can see that sellers are pushing more here. Buyers try to push back up. They're unable to. Sellers push more. Now we enter this bar. And as we enter this bar, we have, as price tries to go down, sellers are really pushing hard. And at this bottom part, you can see that at the bottom, sellers were pushing hard, and it tapered off toward the top. It tapered this way, right? Tapers off to the top, and then the buyers start pushing hard and taking over. And then what happens is that relatively very little buy volume, very little volume is required. They expended very little volume to start pushing price back up. So this is an entry. Now, that's my primary signal. It doesn't mean, gee, I should go long here. The next thing I do is I look over here, which isn't going to work well for you right now because we're in Globex, but I look over here, you know, right now we're not looking at the same spot on the charts, okay? But I look over here and I look at these figures here. These things, these are liquidity nodes, high liquidity nodes. And so I look at, you know, well, let's say that this is that price at that bar, right? Let's just assume, even though it's obviously not. I would look above and see that, wow, there's only, you know, there's one liquidity node right above here. It's 8 points away from price. And as I go further up, there's nothing up there.
Oh, that's kind of cool. That
by
you
the
can
same,
see that order.
Yeah, by the same token, I can see that, we have a liquidity node here, another one further down, another one further down.
And this is real time. This is
real
right now.
Yeah, well, this is right now. This is liquidity right now. And this one I went backwards on. So obviously,
sure,
you know, this is just going backwards on the chart. So basically, you know, looking in that, I would know that, okay, you know, they're trying to attract price 7.5 points up from here. If I take that trade, there's going to be, you know, very little leeway for that trade up before downstairs liquidity starts taking over. Yeah. So and this example happens to work out, but you know, so based on that, I can say, yes, I'm going to take this trade and I'm going to scalp 2 points off of it immediately. So basically what that means, a little clicking here. So, you know,
this is all on the Sierra chart right here that you have.
Sierra chart. So, you know, this bar finished forming here, and that's where the next bar started. So obviously you're not taking your trade somewhere inside this bar unless you're really good and you already know how to do this. Most people, you know, you take your trade once that bar has formed and you've assessed it. So you're taking your trade here at the start of the next bar. So all of a sudden we're long here. And then that's the other factor is, which I'll get into at some point. I made a note here somewhere. Here it is.
That's okay. What time frame are you looking at when you say this is where you're going to make your trade? Is this a 1 minute, a 30?
Oh my God. Okay. You know, that's the thing.
Oh my God, that's it. I know the answer. Okay.
All of these things spawn other discussions that have to take place before the question can even be answered, because most people think of, when they're looking at charts, most retail traders think of them in terms of time periods. And I don't use time periods, I use periodicity. Periodicity is just, you know, a factor, a measure, you know, like you might have, most people, in other words, are thinking of, you know, inches, feet, yards. Those are all exactly.
All those orders are in a bar. And so how do you identify that bar as a 1 minute, a 10-second?
Okay, well, here's the thing. So I'm trying, I'll preface that. Most people are thinking in terms of inch, foot, yard, etc. Okay, those are all the exact same unit of measure. Okay, I use different unit of measure. It's almost like saying that one chart is in inches, the other chart is in degrees Fahrenheit, and you know, the next chart is in BTUs or something. So this chart is a range chart, and this one has a 3.5 point range, 3.5 point range. So each of these bars is 3.5 points. It is not time based. Okay.
Wow. Okay. So this is specifically for futures and scalping. That's perfect.
Yeah, and you know, by the same token, this I also have one. I'll switch it on.
Oh, so
Oh
they.
no, what did I do?
Oh no, I've heard that before. Oh no.
Yeah, okay, I clicked on the wrong thing. There we are. Okay, so like this is a completely different chart. This chart is based on delta. It's not based on range. It's not based on time. It's based on the difference between bidders, you know, buyers and sellers. Once the difference between buyers and sellers is 600 delta, the bar prints.
Your chart's not on.
Oh, it's not?
No, just if you see me raise my hand.
I don't, well, yeah, I can't see.
Oh, okay. Yeah, then I'll just.
Okay, let's try this again.
It's okay, take your time.
There we are. You can see this, right?
Yes, thank you.
Okay, this chart is a delta chart. Each of these bars is made up of 600 delta, the difference between buyer and seller, bid and ask. So each of these prints when there's 600 delta. And so this is, again, a completely different type of chart. And, you know, then over here, we have a different type of range chart. This is a 3.75 point range chart that generates entry signals and exit signals in the overall scheme of things. And then below it, we have a traditional 5-minute chart.
Okay. So, no wonder I can understand that one easily, right?
Right, but oh, I see what happened here. Okay, so this one is, you know, here's back to the 3.5 range chart. So most of my footprints are based on 3.5 range, but when we hit a resistance or absorption or support zone, oftentimes I switch to a delta chart to see the compression of buyers and sellers, and that shows me where they're compressing and when we are about to have a breakout.
Wow.
For example, this is end of day. This is cash close, so that's a little bit different scenario. But I'll give you just a quick example. Okay, here you see wide bars all around. Okay, so then we start coming down. We start getting some volume in here as absorption starts taking over, and we start having a battle between buyers and sellers. So this bar shortens, and pretty soon you're down to a bar that literally is 1, 2, 3, 4, 5. This one is 6 ticks total, six ticks total, and it absorbed lots of buyers and sellers with a huge differential before, you know, it popped. We reversed, and then it popped, and then it dropped down again. But that's a bad example because I had to pick something quick here, right?
Sure. No, I don't think
the same
it's a bad example at all. I thought that was very interesting.
Like here's a breakout, right? You've got this compression happening, and then we drop. There's no liquidity down here, and we pop up. And in popping up, we get absorption, and we break through an absorption zone. So that's a delta example. You know,
that little line that's there, I take it that's the software that's drawing that. Is that a balance line? Is that like a threshold line of some sorts where, you know, who's winning and losing kind of a thing?
You mean this line up here?
No, inside the bar itself.
The little white line.
Yes.
Those are just little white lies. What can
Who makes those little white lines?
No, those yeah, the white line. The white line is simply. Yeah, simply the white line is actually, you've heard of point of control, POC.
Yes, okay. Oh, good.
Yeah, well,
this actually said something I think we all now understand. Everything else was calculus to us.
No,
we didn't understand.
This is going to be worse. This is going to be worse for you because
control, we got it.
Yeah, but the thing is,
oh, that's cool. It gives you point of control.
You've heard of point of control, but this is not point of control. No, but it's okay. Here's the thing. You see the little yellow square?
That's funny. Okay, yes.
The little yellow square is point of control. The white dashed line is the secondary point of control.
Oh, geez. Okay.
Because
a lot of stuff here.
No charting software has that. So I had to develop custom studies to do that. So I
Oh,
can
so
see
this is your specific. This
this
is,
is, yeah, this
oh,
is my specific thing. If you, you could,
oh,
let's see. Can you see this when I open this up?
yes.
Okay.
Wow.
Yeah, you can see this thing here, min-max matrix study with my initials after it.
Wow.
That's one of my custom
It's just
studies,
like
and I,
ThinkorSwim, where there's just a whole bunch of studies and you can pick one or you can create your own, just like ThinkorSwim.
yeah, but it's, there's different types of studies you can create. These are actually coded in, Sierra's native C++.
Right.
And then you have, like, I've got this session VWAP study, which
Oh,
is
that's
not
interesting.
normally offered. So I've got a bunch of custom studies that I use, many of which I've coded. And so this allows me to see, where the primary interest was and where the secondary interest was in the bar
I see. Well, I
as
think
well.
a lot of retail traders, and of course, I'm going to steer this back to retail traders because we're not experts at Sierra charts, but I think that we can understand that line of thinking where you as well are looking at point of control. You're looking at the secondary point of control. I mean, that's
And primary, yes, exactly. And I'm looking at many other factors, and then I'm having to, once I identify something has the probability of being a trade, then I'm, turning over to the 5-minute chart, and I'm looking, see right there, this 339 just appeared as I was looking. So all of a sudden liquidity
can
is
you show us
starting.
that with I didn't see that. I'm sorry. Oh, okay, we got it.
That just appeared. So all of a sudden liquidity is slowly starting to shift upward here.
Oh,
And we still have these, this is real time, by the way. We have these,
okay.
Downward nodes of liquidity at 37.40, 37.30, 37.20. You can see the nodes. You can see whether, how long they've been there and how strong they've been as price approached them, things like that.
I want to put it into context for.
See, that just disappeared.
Yes, it did. And why is that? They took their order off the
Yeah, they're just shifting. You can see here you can see here a picture of liquidity at the tick level.
Okay.
And you can see where the nodes stand out. So, by looking at this, I can tell that they're trying to drive price currently to 37.60. There's a big node of liquidity, big pool of liquidity sitting at 37.40. See, this just popped in here too, down here, but that's further away from price.
Right.
So close to price, we have, 37.40, but we have this node at 37.60. It's not as much liquidity as at 37.40. However, they are being clever and they're forming a ramp to get to that 37.60. Whereas down here, it's very thin.
Oh,
so, there's a probability we're going to head up here, eat some of this, and then depending on what the downside does or shifts to, we either will continue or we will reverse back.
Yeah, because there's a long node right there at 37.40. Okay.
Yeah, and this node may change without notice. See, it just changed and flashed. It'll change without notice. It has nothing to do with the current bar. The timing of liquidity is independent of what's happening with the bars.
So us retail traders, as we look at like charts and stuff and our old school, we're thinking about like volume profile and stuff like that. And this reminds me of that, right? The nodes, the volume profile. I mean,
yeah, I mean, I use the term node only because people are familiar with it rather than, making up yet another term for something, a liquidity node. So everyone, pretty much knows what a node is if they've done some form of TPO or anything like that.
Okay, so, but, just to put it into perspective for those of us that are not experts at this. And so when you look at those nodes, those are basically your real-time support and resistance levels that are popping up, like literally popping up real time. Is that correct?
Yeah, these are not support and resistance levels. They're just where liquidity is.
How about the node itself that you're referencing node?
Well, the support, support and resistance end up being these other lines that end up being drawn in my chart. These are actually, these are prior trade zones that generally had absorption and a turnaround in price as a result of the absorption.
Okay.
So, we can go back. I mean, now we're
that's more connected to the like volume profile.
Yeah, or yeah, just setting levels, right?
Yes. Yeah.
So like here's an example. Let me get this to stop scrolling.
I guess what I'm trying to do is connect the somewhat like foreign terminology to a retail trader that hasn't seen this type of chart before, and make the connection. That's all I guess that I'm trying to do as a layperson, is just trying to make that connection, because I'm not an expert at it either.
Well, how about a pivot?
Okay. Oh, a pivot point. Okay.
Yeah. So you see, I mean, and literally that's what I'm looking for also.
Okay.
Like here, the arrow, okay, just to clarify for everyone, the yellow arrows that you see, they are drawn by me as I'm narrating for people during the day. Okay, the yellow arrows are drawn by me.
Okay.
My system is generating the lines that you see, the straight lines that you see. Like here, the system actually, here it gave an alert. Okay, this is the alert. And it also gave an audio alert. If you were, if you're listening to my live stream when this happens, it'll say Delta top. So, it lets you know that, hey, pay attention to the screen. You have an event happening here. It's a possible trade. Okay. And sure enough, what this turned into was a short, down to here.
Right.
And we absorbed here some, went sideways. We had to absorb here. We went past this prior level, prior trade zone, and we bounced off this lower trade zone. And so, if you're looking at this, you also know that, oh yeah, maybe I should take a long off of here now, or you can wait for the system to tell you something. And the system up here, for example, system favored shorts most of the time today. So you can see that.
Oh, that's interesting. Okay.
Up here, the system said get short. We had two events up here, actually. I can see two different types of lines. One of them is this was an upper pivot, and then the upper swing zone. And then the second thing is this was a delta top event. The top exhausted, price went back down, busted through a bunch of zones, even busted through a prior stacked imbalance, triple stacked imbalance support zone right here, the green thing. Yeah, I know all the terms. That's the thing that I get tired of too. And then the system said, probably a good idea to go long here, bud. It didn't say bud, it said delta bottom, actually, because I can tell what it said by the color of the line that was generated. Okay, so it said delta bottom. It also told you, if you're short, this is probably a good time to bail. But
let me ask you that, because I've heard your charts say that, trap trades, it says, and we all know as a retail trader, trap trades, because we're typically one of the trap trades.
Yeah, so you're usually the one being trapped. Exactly.
Right. And so when I hear this and I hear all the commands, is that something that you programmed, or is that something that comes with this?
No, it's all stuff that I programmed.
Oh, yes. Wow. Okay, that's pretty cool.
And then the other thing is like you can see this yellow line, right? Yeah. And the yellow line is actually the system. Literally, when we hit the yellow here, it said seller exhaustion. Right. So guess what happens if you have seller exhaustion?
Right.
Buyers are going to step in.
That's right.
And that's what happened. And then we had some other things, just too much to go into. We had a double delta event. It announced double delta
it was I mean, the whole week has been so interesting, right?
Yeah.
We have been good. Like I loved it. I mean, everyone's got their own perspective, but as option traders, we love this type of volatility.
Right.
To make fast money, right? And I would imagine as a futures trader, that's exactly what you want as well, is that volatility. But when you talk about, because I often talk about with our Discord group about, when you're getting, just because the market's open every day, it's not a great time to scalp every day. Just because you have the ability to scalp doesn't mean you should be scalping, because you're going to be one of those trap trades that I hear your system
right.
saying. And so I just want to, because I know we connect on this level, even though I'm old school in chart analysis, and this is, more new, is that when you say you're a liquidity trader, can we can we like identify with each other? Like, to me, liquidity is like, I need a wave. I need a
Liquidity.
volume of people to throw me over the thresh line when I have a put or a call in place, because that's what you need to make money on as an option trader, is on just a straight call and a straight put. You need that wave to push you over. What's liquidity when you say I'm a liquidity trader?
Well, most like people that are looking at, let's say, order flow, right? They're actually looking at the flow of orders coming in and things like that. I'm not in particular looking at that. I'm looking at what are the limit orders on the order book. Limit orders are also known as resting orders. For example, let's say that we're at 37.53 right now. Okay, we're at 37.52.75 now. Anyway, let's say that you placed an order to buy, 2 contracts at 37.48. Okay, that's a limit order, and your 2 contract order would be reflected on the order book here at 37.48 as part of this pile of liquidity.
Got it.
So these are literally, if these are resting orders, that implies that these are limit orders, because if these were market orders, they would be executing
would already be in.
whatever price is. So these are limit orders, and that is the liquidity on the order book. This is the depth of market, as it's known. But basically it's just, everybody's limit orders. Or like, let's say that you're in a trade, you're long from down here,
okay,
and you've placed the target exit, right? You place your target exit at 37.60, let's say. 10 contracts at 37.60. So you are part of this line in here, and I can see, where these contracts will be executing.
That's if you were smart enough, right, to enter the trade and put your stop right there, right? So it's so important to actually identify your stop already before you actually get into the trade. And you can see this by, look, this is what he sees on this. Can you imagine what the institutions are seeing?
Well, they're seeing pretty much the same thing. They're seeing the same thing. They can enable another feature which lets them see the details inside these liquidity bars themselves, but I can also enable that option.
I know, but there's a little private.
But it doesn't. Yeah, it doesn't help me.
There's a little private joke with my members. Like, I'm always getting out like right before the major resistance, because everybody knows where that resistance. Right? Everybody knows where the resistance is.
Right. This gives you an idea.
Sandy, how do we want to handle questions or comments?
Questions at the end. We'll give it the last 10 or 15 minutes.
Good. Okay. All right. We're about 15 minutes out.
Oh,
okay. And then just to let you know, this headset only has 4 hours of life on it. So I can only be on for another 3 hours with you.
And you know what? I could stay on here with you for 3 hours.
Yeah, no, that's how long it takes to answer questions.
However, I just want to wait before we go on for just a second, because I just love this point right here, because I say this to everybody I meet or train. I say, if you know what the exit point is on support or resistance, or you see it on an institutional flow order, this just backed up my theory that you get out before that little level. Get out.
Oh, yeah.
Let it push you into the profit zone so much quicker, because when you chase price, when you reach it and then you chase price, guess what? Your premium just shrinks and you make no money.
Right. And that's one big thing that I tell my, all of my traders that are in my trade room. I tell them, okay, the target is 37.60, for example. And if you're long on a trade coming up to 37.60, you already know by my rules that your exit should be depending on how far this is, the travel, your exit should be probably about 2 points before that to ensure a fill. And also because often as we get to 37.59, there may be a liquidity shift. And so you end up not getting filled. Yeah.
You just made me feel so validated tonight.
All my people know, give up 2 points to make sure that you get filled.
Yeah, and to retain your profit, by the way, so that you're not chasing price as those big institutions with
Right.
the huge orders are getting out, and you got your little 1 or 2 contracts. Guess what,
Yeah.
baby? All right.
Sandy,
So,
that's another good point you bring, the big institutional traders. That's
yeah.
another thing that I use to gauge my trades on.
Hmm.
I want to know, I need to know what kind of market is this at this very moment? Is it, and I don't mean during Globex, but I mean during the regular day. Are institutional traders trading, or is this purely a market that's dominated by market makers? And
Perfect.
so the way I tell very easily
Yeah,
is,
how can you tell?
well, down here, you see these guys, these things,
Oh, I love
you're gonna need to do a mute.
Yeah, no doubt.
Meanwhile, we can sort of swing to this, but
Yeah, I'm swinging to it. I just can't figure out how to do it correctly.
anyway, can you hear me over that meanwhile?
Yeah, I can, but I just feel terrible that I can't like shift
Okay,
it.
well, I
He's
mean, I can
probably
open the
laughing
other window
at
to
me.
go find them, but anyway, so down, down here, these are the institutional traders when they're placing their large orders. And so this lets me know, are institutional traders just doing onesie twosies, as you see here, or are institutional traders taking over the market? And so that lets me know what's happening, because I want to ride the backs of institutional traders when that happens. Let's
All
take
right,
a
so
look here.
give me a minute so that I can get this off. But I do want to tell you that I saw the recent, this guy's like, he's trying to, upset me. But I just want to tell you that I saw this last movie about Elvis Presley.
Yeah.
Just awesome. Like,
Oh, there he is too.
awesome.
Oh, we can just do this.
Such a handsome guy, man.
There we
Okay,
go.
it's such a great movie.
I
So,
can easily do that there.
oh, you got
And
it? Oh, that's right. You're the host. Okay, so I know who that guy was that was doing that. If you didn't see this movie that just recently came out on Elvis Presley, you have to see it. It's just lovely. Okay, now go ahead.
okay, so let me when I do the share, I can't see, who's doing what. Okay, there we go.
Okay.
Yeah, anyway, so yeah, these things down here show me when large institutional traders are playing their games. And because normally when it's just retail traders, it's the market makers that are taking over. And then when the institutional guys come in, especially in a flurry, this isn't that great a flurry, but continual stream of institutionals, when they come in, the market makers step out of their way. And today was sort of like a nothing day at the end as far as what was happening. So there's not much to illustrate here today.
Okay. All right. Well, you know what? Let's take a couple questions. Let me just read through the chat here. I know that, by the way, if there's YouTube, we're primarily on Zoom. If I missed your questions, I'm so sorry. But don't worry, we're going to do a follow-up because I found this fascinating. If you're, if you've been a trader for a while and you've heard about footprints in this should interest you. If you're a scalper and you want to be precision about order flow and how that works, again, this is like the latest technology that there is. If you're scalping on ThinkorSwim with futures, there's such a lag period. There's so many issues I can tell you about. And I'm just a retail trader that's not even experienced in futures, and I know that. So
right, been there, done that with ThinkorSwim. Not a good experience.
Exactly. So let's see if there's some good questions. I'm glad Elvis left the building, but I'm so glad that you let me know that, to let everybody know that was a great movie. Let's see. Volume profile, volume at price, VP is again where it trades it. Yep. Leo, nice job. Is this? Yep, volume at price. See, everyone's identifying with those little things. So I'm glad that I was hopefully able to try to connect like some of this very, it is like calculus. It's very difficult. So liquidity nodes, yep, they act like magnets. Absolutely. Anybody got any quick questions that we can ask Lewis before we say goodbye? It seemed like this hour went so quickly. Where's the data being extracted from? Where's the data being extracted from for the liquidity? I mean, it must be right from.
Okay, I unmuted myself here. Okay, so basically it's part of the feed. You know, when you get Sierra Chart, you can also sign up for the data feed, and the data feed includes liquidity. It includes depth of market, DOM, the dome.
Is there any connection to, like, you know, when as a retail trader, we're looking at like level 2 stuff? Is any connection or no connection?
There is a connection, but this gives me a real, I can go back, what is it, like 50 points up and 50 points down. And then also I have the option of actually, you know, like here you see that, you know, there's 358 contracts total, right?
Yes.
At this level. Well,
Yes.
I also have the option of seeing, well, how are those 358 contracts distributed? You know, there might be onesie, twosie traders making that up, or there could be some people doing 50s and 40s and 60s. And then I know, we got institutional traders buried inside this pile. But, you know, so those are all different options.
Yes, yes. And somebody asked, you know, how can I translate or compare this to a 5-minute? Well, actually, you know, when you're scalping, you're not using a 5-minute. So probably on ThinkorSwim, we're using like maybe a
But
30 tick chart.
yeah, you can't translate it into a 5-minute because it's like okay, it's like translating inches into degrees Fahrenheit.
Yeah, you can't, they're not comparable. And so,
Right, different. It's a different unit of measure. So just like you can't translate inches into degrees Fahrenheit, you can't translate a range chart into number of minutes.
right.
Because like here in Globex, okay, I don't have those stats up, but this bar, you know, this bar can sit here for 20 minutes if price doesn't move 2.5 points above or 2.5 points below. So this price can just sit here for this bar can sit here for a very long time.
Okay.
And the thing is, these bars are not time-based. That, you know, that should be evident by now, right? These bars are not time-based, which means that time is not an equation that I use in my trading. So I've been able to eliminate a variable, time, that is. I don't use time in my trading.
Okay.
Yeah, so that's a big thing. Most people are looking at a time chart.
Yeah, we're just doing that way.
Yeah, and if price remained the same for, you know, 30 minutes, so you've got all these 5-minute bars exactly the same, that's not helpful to me. I'd rather see one bar that has that data in it instead of a whole series of bars, because what I'm interested in is changes in price, not changes in time.
Right. And so, you know, for someone to look into like Sierra charts, would they just go online to Sierra charts, or?
Yeah, you know,
Okay.
oh, yeah, this will be an interesting experience. Yeah, Sierra Chart, you can go online, you can download the software, you can get, you know, a trial of the software. I'll tell you, Sierra Chart is very difficult to learn. It's very frustrating until you know how to use it. And the best part, what I really, you know, I liked this. Most people will hate this. There's a Sierra Chart support forum, and you have never seen tech support like this. Okay, they will, you'll post something asking, you know, why can't I do this, blah, blah, blah. And I mean, this is not verbatim, okay? I'm characterizing what they say, but they will literally say, well, you can't use that because, they won't literally say, excuse me. They'll say, you can't use that because you're too stupid. Why don't you try that? I mean, their tech support is just hilarious. It's like, it's like brutal. It's brutal. It's funny. I mean, I find it funny. You know, I'm not going to, it's like, if you have a good product, I'm going to use it, and I'm not going to take offense to what you're saying. I'm just going to keep asking you until you answer my damn question. That's, you know, it's like,
so Bob says,
but it's really funny.
Bob says, what's your rate of accuracy? Alpha generated. Have you measured this, or?
No, I've not measured it. You know, the people in my room see that, because the thing is, I'm a discretionary trader. You know, you could have this thing telling you to go long. You could have the footprint telling you, yes, you know, that signal is a good entry point. But then I will go look at liquidity, and liquidity is the gatekeeper. Liquidity makes the final decision on whether it's a, you know, liquidity has veto authority over everything. So based on liquidity, the fact that this said go long here,
I know, I'm just laughing because
Yeah.
when you, I just love that we're on the same page when it comes to liquidity. And so there is a video that I have on my channel that's called, when not to scalp. And it's just
Ah,
really all about, like, you really shouldn't, a lot of new traders just want to scalp.
right.
And I'm sorry, every day we come to the market and you need to know when is a good time to scalp and when it's not a good time
Oh,
to scalp, because you're going to lose your money.
Sandy, that's a really good point because, I started also with scalping. I got really good at scalping. I was placing, 20 to 30 trades a day, scalping 2 points,
Uh-huh.
which is, $100 per contract. Okay. 20 to 30 trades a day. And, at the end of the day, I make like 60 to 120 points or so. And I did that for like 3 trading weeks straight, and I totally burnt out. So then I left for a 1 month vacation. I said, this is just not worth doing. The money is just not worth the
The
amount of
heck?
sacrifice. Yeah.
Yeah,
So
there's a lot of sacrifice
yeah,
there when you're just staring at your screen
right.
like this. There really is. I mean, it's just, it can drive you crazy.
So, what I did is when I came back, I decided I need to combine the best of both worlds. So I am now what I would call a multimodal trader.
Mhm.
Um, I on certain things, well, basically, I always have 2 targets. So my entries are always multiples of 2 as far as contract size. It's got
Okay,
to be a multiple of 2. My T1, so targets are, T1 and T2.
sure.
So my T1 is still 2 points because I want to make $100 as soon as possible after entering my trade. Okay.
Okay.
Once I made those $100, the break even for the stop for my T2, I set to break even. So that means at the point I made $100, if price reverses on me,
Hmm.
I keep $100.
Okay.
My second side of that trade is now stop set to break even. And then my T2 is what I call my runner. So I will set the runner at a prior trade zone minus a couple of points. And, you can keep doing that every time there's an opportunity. And 80% of the time you're getting $100 for doing that. And maybe your runner is closing out at break even. And then when there's an actual run, you'll make the 30 points or so per
Oh,
contract on your runner. And then in addition, most of those other times you've made a minimum of $100 per contract on all your quote failed trades.
and
So
what
that's
is, and
what
what,
I say.
what's your stop loss originally if you get in and it doesn't go to,
It's 2.5 points. It's
okay,
always
always 2.5
two and a
points.
half points. Yeah.
Interesting.
Yeah.
Okay.
So, and the thing is that with the footprint stuff, I can make precision entries, and that's the difference.
Yes,
It's not like a swing trade, and I'm gonna, I got to give this thing 30 points latitude on my stop. No,
that's true. Yeah.
these are precision entries, 2.5 point stop, and with a 2 point T1, it's like 80 to 90% of the time I'm hitting that T1 immediately.
Hmm.
So, and at that point, it's sort of like it doesn't matter if price reverses.
Yeah, it's a free trade. Yeah,
I get to
that's
keep 2 points. So, and that's a nice thing. Like, let's say that I'm wrong. I placed 10 trades for the day, and I'm wrong all 10 times. Okay, that
Mhm.
means that, oh gee, I made 20 points for the day being wrong. That's the difference.
Unless it goes against you right from the get-go, but
Right.
you're so experienced at
Very,
that.
very,
Yeah.
very difficult for that to happen, especially when you're watching liquidity as well, and you're not taking the trades that you see are risky based on liquidity.
Okay.
And the other thing is, and on my Twitter feed, I've demonstrated to people. I mean, I will post a price target like 4 hours in advance.
Yeah,
And
give
then
everyone your Twitter handle.
it's I don't know if you can see it on the chart here, but it's just @Lou Payne with LEWPAYNE @Lou Payne. And on there, in fact, I posted some levels that
Yeah, he posts a lot.
we reached them in 4
Options
days.
for Sandy, if you don't already know, it's options_Sandy under Twitter. I just got on is it called FinTwit? I'm not, I'm just getting on to FinTwit now. Is anybody on FinTwit? I wonder about that. Are you on FinTwit, Lewis?
No, I have enough to deal with as it is.
That's how I feel. Oh my God, the technology is killing me. Killing me. All
Yeah,
right.
I have enough, and you know, and I've got a following, and I've got more advanced traders that I live stream to. They're more advanced traders, okay? So I don't have to, you know, explain the basics, which would detract from everyone else's time. And so the advanced traders are seeing what I'm doing, and they're getting even
when you're
more
answering my
explanation.
questions, you mean, or what?
What's that? No.
When you're answering my
I mean,
questions.
you know, if somebody has never really traded footprint before, they first need to know how to read footprint,
Yeah.
you know, and then it's basically, it's sort of like,
You get
you know,
used to it. I'm getting used to it.
I tie it all together for the traders that know the various disciplines.
Yeah. Yeah. Well, this has been so lovely to talk to you live. We definitely have to get together again. I feel like we just seriously, just like we basically just touched that little surface and that was it. So there's so much more to learn from you, as well as the style of trading. I appreciate everybody for coming here. If you have any questions, please go to, I don't know if he'll answer your questions. So he's not as tolerant as me.
No, I'm not. I'm really not. And that's, you know, because I'm getting thousands of repeat questions like, what's your trading platform? You know, what's that line? And it's like, you know, that's fine at first, but when it like repeats dozens of, and then you've got people who are asking questions, not because they want to become better traders. They're just curious, you know. Well, I've never seen this before. Why don't you just tell me everything about it? And it's like, because I can't do that to thousands of people.
So you need to use the same information that
he's speaking the truth, like to every like trainer or you know, any educational person that's out there right now. But I just love, like, you know, I still have patience left. So if you want to email me, you can, and I'll find the answer for you. It's
right. And you know,
Lewis, if you'll just go ahead and use the same language that the people at Sierra Charts use, you can just say, you know, you're too stupid to understand this.
No, it's just funny. I mean, they, you know, at times they even say that to me, and it's just funny. And then I'll blast them with more information. It's like, look, here's what it's doing. You have a bug here, blah, blah, blah. You know,
yeah, you're giving them the good
it's just funny, you know, to me, it's just entertainment. I try not to get offended by stuff. I just try to get entertained by it. It's more effective.
No, I hope this was entertaining for everyone. We appreciate you being here. Shoot me an email if you have a question. I'll figure it out eventually within a week or so and get back to you. And Lewis, we'll meet again.
Yeah, Sandy, or, you know, you can just, why don't you just go ahead and, you know, create a list, take a list of those questions. And if we do another live session, we'll just go through and answer them and actually demonstrate on the chart if it's, you know, something that's better suited to a visual.
Yeah. I think I'm massaging Lewis right now to become a little bit more tolerant. I think he's getting a little bit more palleable to, you know, I appreciate you, Lewis. I really do.
Well, you know, I mean, it was sort of humorous in here. I like the whole Elvis interruption and stuff. It's like, yeah, commercial break.
I don't, you know, I don't do a ton of YouTubes via live. And so this is new for me too. And, but you know, just got to roll with the flow. And I do love Elvis, and no one's going to get me down if I got to hear, "You're caught in a trap." All right, guys, have a great night.
Yeah, thanks a lot, everyone. And to everyone listening, thank you for tolerating the explanations. Until next time.
All right. Thank you all. Thank you all for joining tonight. Hope you have a good trading day tomorrow.
Thank you, Jay. Appreciate all your help.
You're welcome.
Bye, guys. See you tomorrow on Discord.
Bye-bye.
Bye-bye.